Hello everyone. We meet again. How are all of you doing? We are going to continue from the last lesson. Chapter 5. Adjustments at the end of accounting period. Ready? Let's go. At the end of the lessons, students should be able to 5.5a. Mention the purposes of adjustments. 5.6a. The types of adjustments. 5.7a. Correcting entries for errors. 5.8a. Preparation of adjusted trial balance. 5.9a. Preparation of adjusted financial statements. The need for adjusting entries. Ensure that the revenue recognition and expense recognition principles are followed. Necessary because the trial balance may not contain up-to-date and complete data. Required every time a company prepares financial statements. Will include one statement of profit or loss account and one balance sheet account. Please answer this question. Recognizing revenues and expenses. Revenue recognition principle. Recognize revenue in the accounting period in which the performance obligation is satisfied. Recognizing revenues and expenses. Expense recognition principle. Match expenses with revenues in the same accounting period when the company makes efforts to generate those revenues. So let the expenses follow the revenues. Examples of expense. Advertising, utilities. Illustration 3.1. Gap relationships in revenue and expense recognition. Please answer this question. Please answer this question. Types of adjusting entries. A deferred are 1. Prepaid expenses. Expenses paid in cash before they are used or consumed. 2. Unearned revenues. Cash received before services are performed. B. Accruals are 1. Accrued expenses, which expenses are incurred but not yet paid in cash or recorded. 2. Accrued revenues means revenues for services had been performed but not yet received in cash or recorded. Types of adjusting entries continue. C. Depreciation expenses. Is the cost of using an asset and it is assigned as either a cost of production or an expense of earning the revenue of the period. D. Bad debts expenses. Expense represents the uncollectible amount for credit sales made during the period. Errors affecting and not affecting the trial balance. There are two types of errors. Types of errors can be seen. 1. An error in the journal, the entry has not yet been posted. 2. Journal entry is correct, a mistake is made while posting to the ledger. 3. Error in a journal entry that has already been posted, both journal and ledger are incorrect. B. Types of errors cannot be seen. 1. Unrecorded transaction. 2. Incorrect amount recorded for debit and credit. 3. Accounts reciprocity. 4. Error of principle. Adjusted trial balance. Is prepared after all adjusting entries are journalized and posted. The purpose is to prove the equality of debit balances and credit balances in the ledger. Is the primary basis for the preparation of financial statements. Adjusted trial balance is prepared after all adjustments are made. Finally, the financial statements is prepared using the adjusted trial balance information. Thank you. Unless commitment is made, there are only promises and hope but no plans. Peter Drucker. The end of Chapter 5. Please answer all the questions.